What's up, guys? It's the Oracle, hopefully with another informative video today. So it is the day after Thanksgiving. We have a short day today. The market's trading basically flat. In this case, I'm just kind of focused on Meta anyways, because that's where all of my positions are currently. She's red. She's red today. Unfortunately, though, she's not really moving, enough, right? So she's slowly just killing the options, right? She's killing what's called the IV, right, which stands for the implied volatility. And of course, theta decay, right? That also works on your options and slowly starts to kill the premium, right? And here's a definition of implied volatility, right? It represents the expected volatility of a stock over the life of the option. As expectations change, option premiums react appropriately. Implied volatility is directly influenced by the supply and demand of the underlying options and by the market's expectation of the share price's movement, right, or direction. So what does that mean, right? It means no one's buying options right now, right? The demand for the option is dying because the stock isn't moving enough, right? Up or down. So even if you had calls, you're probably losing money right now, right? Well, obviously because it's red right now, but even when it was green, it just wasn't green enough, right? There wasn't enough volatility, right? There wasn't enough demand for those options. So slowly they start to lose value. And that's why I was telling you guys, it's really cool and best to sell options, right? It's always better to be the casino and, the dealer, right? If you're buying options, you're gambling. So just a quick look at the chart here. This is a 15-minute time frame. And again, these are those exponential moving lines that I like to use. I had talked about it in my first video. And you can see that, Meta's losing steam, right? But it's just not happening fast enough, right? Let's go to a 2-hour chart. Get a different look. Again, she actually came up, and this is what really hurt the options, right? This was on that, when the market really went up, and on that fake news that, Mark Zuckerberg was going to, retire or something like that. So it shot up because the market got bullish. You're like, we hate Mark Zuckerberg, so we're going to buy Meta now, right? Do I agree with that? Not so much, right? I actually think Mark Zuckerberg's a genius, so I prefer he stay the CEO, but that's just what I think. If you go to a daily chart, she's still just flat, right? She's killing options. So if you are selling contracts, selling options in Meta, you are doing really well. I did sell covered calls. I'm still red, but I still have a lot of time on them, and I sold them a long time ago for like a way lower strike than we are right now. I think I sold them at 105, which I still expect to be green on them by the time, expiration comes. I'm still holding my puts in Meta. They expire in, I think, 55 days. The other thing I wanted to talk about is theta decay. Just a better definition if you don't, understand what I'm saying. Theta measures the rate of decline in the value of an option due to the passage of time. It can also be referred to as the time decay of an option. So like I was saying, just over time, the option just slowly loses value, right? Because of the IV and just because of theta decay. So always be aware of theta decay and, the IV, right? Implied volatility. Let's see if we can take a better look at this for you guys. So let's go ahead and go to December 9. And just to show you what I'm talking about, these are puts, right? These aren't calls. But it's the same thing, puts and calls, they all have an IV, right? This is your IV. And right now, this particular strike at 102 is showing a 43.92% implied volatility, right? It's not really really expensive right now. And I like to sell options when this is above at least 70, right? At least 70. If you look at Theta, this is Theta, and this is losing value at probably about $8 per day. And this just continues to go higher and higher each day as the expiration gets closer. So keep that in mind. Theta only increases, right? You start to lose more value in the option the closer expiration comes. I hope that makes sense. So always keep in mind of implied volatility and theta decay, this one over here. The other thing I like to look at when I'm dealing with options, right? If you're lazy, go to Options Calculator on Google, and you just click on this, and it'll bring up, basically options, right? If you're doing a long call, actually, let's go back because I did a put, so we're going to use a put as an example. So it's a long put, right? Because it's bearish. We think Meta is going to come down in the short term. So you would go here, you would click in the ticker, right? In this case, it's Meta. And it's going to give us a real price, right? The real price right now is at 111.55 cents. And if you wanted to see what your option is like if you sell it, if you write it, right? Writing it is selling it, so you could even do that if you want to get, an idea of what happens over time with your option that you sell or you buy. In this particular case, we're going to go December 9, and we are going to go to the $92 strike, right? This is the put side, this is the call side. Again, we sold a put, we bought puts, so we're going to click here. All right, we're going to pretend that we bought, this particular strike and this particular put for $13, right? 13 cents. And you calculate, and it's going to give you a chart. And it's going to show you, the ranges and the time frame, right? So if you were to buy at 13, this expires on the 9th. This is the 25th. Today is the 25th. Let's say, Meta goes to 108 today. It'll show you what that option would be worth today, right? And it has it valued at 31 cents, right? Or $31. So your profit on that particular option, if it was to hit, that strike today, that 108, or sorry, in this case it says at the top, 107.25, you would make, $18 on that contract that you bought. So this is just another way to, check to see, the value of what your option can be. It's just a good way to check things out. I hope that, helps you. The other thing I wanted to pull up is, let's go ahead and just pull up this SPX chart. Let's take a look at it. She's still bullish, right? The exponential moving averages, she's respecting that, right? She's been bouncing off that 5-day exponential moving average, and she rarely comes below it. So bullish looking on the chart. Killing options, calls, and puts right now, though, just because of this slow sideways action, right? It's killing the implied volatility of each contract, right, on the calls and the put side. I hope this video was informative. I hope you're getting value out of these videos. I enjoy making them, and best of luck, guys. And I hope you had a good Thanksgiving and enjoyed your time with your family. And stay vascular, guys. Stay hard. Have a good day.